IBM's stock plummeted an unprecedented 25% in a single day, leaving investors in shock. This catastrophic drop, triggered by a dismal earnings report, raises critical questions about the future of the tech sector. Here's what we know so far. Looking ahead, several scenarios could unfold following IBM's staggering earnings miss. The company recently reported lower than expected revenues and profits, raising alarms among investors and analysts alike. This disappointing performance is particularly concerning given IBM's long-standing efforts to pivot towards high-growth areas like artificial intelligence and cloud computing. Historically, IBM has positioned itself as a leader in technology innovation, yet this earnings miss raises questions about its strategic direction and execution. Analysts on Wall Street are likely to revise their earnings estimates and price targets downward for IBM, reflecting a lack of confidence in the company's ability to meet future expectations. This recalibration could trigger further selling pressure as investors react to the new outlook, potentially resulting in a significant drop in IBM's stock price. Additionally, IBM's CEO will need to address whether this earnings miss is a temporary setback or indicative of a longer-term structural shift in demand for its AI and cloud offerings. The management's response will be crucial in guiding investor sentiment moving forward, especially as tech companies face increasing competition and market volatility. Another area of concern is the potential ripple effects this could create across the market. If other major companies, particularly in the tech or industrial sectors, report similarly disappointing results in the coming days, the S&P 500 and NASDAQ could face renewed pressure, derailing recent gains and shaking investor confidence. Furthermore, while soft inflation data had eased rate hike fears previously, IBM's earnings miss might reinforce concerns about economic momentum, potentially influencing Federal Reserve Chair Jerome Powell's outlook on interest rates. As we observe these developments, one question remains: how will IBM's performance reshape investment strategies and influence the competitive landscape in the tech sector? The outcome could significantly alter market dynamics in the months to come. IBM's recent struggles can be traced back to its ambitious pivot towards artificial intelligence and hybrid cloud solutions, a strategy designed to counteract declining revenues from hardware and legacy software. This pivot was not merely a response to market trends. It aimed to position IBM as a leader in the rapidly evolving tech landscape, where cloud computing and AI are becoming increasingly essential. However, macroeconomic pressures have mounted over the months, complicating this transition. In June, soft U.S. producer prices suggested that inflation might be retreating, yet this also hinted at weaker demand, directly impacting IBM's revenue forecasts and raising concerns among investors. The broader market had remained resilient, buoyed by the perception of strong earnings across various sectors despite ongoing geopolitical tensions and spikes in oil prices. However, IBM's recent earnings miss exposes a fragility within this seemingly robust environment. Historical context shows that similar earnings surprises have often led to significant market shifts. For instance, companies like General Electric have experienced notable declines when they failed to meet investor expectations, causing long-term damage to their reputations and market positions. The key players in this situation include IBM's management, who had projected a brighter future based on their strategic pivot. Their decisions now come under scrutiny as investors reassess the viability of that strategy in light of current economic conditions. The impact of this earnings miss may lead to increased volatility in IBM's stock and a reevaluation of its growth prospects. Investors are likely to demand more transparency regarding future performance and clearer pathways to profitability. Looking ahead, IBM must adapt quickly to changing market dynamics and demonstrate that its investments in AI and cloud technologies can yield tangible results. The company's next earnings report will be crucial in determining whether it can regain investor confidence and align its strategy with evolving market realities. IBM's catastrophic earnings miss has sent shockwaves through the financial markets, raising concerns that extend far beyond the company's immediate performance. As one of the largest legacy technology firms, IBM's struggles serve as a bellwether for the broader tech sector, prompting investors to reevaluate the stability of large-cap tech stocks. This significant shortfall in earnings, driven by sluggish demand for its cloud and AI services, has led to widespread speculation about potential vulnerabilities that could affect other major players in the industry. With the earnings season ramping up, market analysts are warning of a contagion effect that could ripple through the tech landscape, particularly as companies like Netflix and several banks prepare to unveil their financial results. The implications of IBM's performance are immediate and profound. Investors are now approaching upcoming earnings reports with heightened caution, mindful that IBM's disappointing results may signal deeper issues regarding corporate earnings quality in a challenging economic environment. This cautious sentiment has triggered a valuation reset, as investors are compelled to reassess their expectations surrounding IBM's ambitious transformation into cloud services and artificial intelligence. Previously buoyed by optimism, the market is now recalibrating growth prospects for IBM and potentially for its peers. For the average person, the significance of this event cannot be understated. It highlights a potential shift in market dynamics where companies can no longer rely solely on tech optimism to drive stock prices higher. With inflationary pressures and geopolitical uncertainties looming large, the landscape becomes increasingly complex. The repercussions of IBM's earnings miss could reverberate through retirement accounts, mutual funds, and individual investments, impacting the financial well-being of countless Americans. As we look ahead, the outlook for IBM and the tech sector as a whole remains uncertain. Analysts will be closely monitoring upcoming earnings reports to gauge whether IBM's struggles are an isolated incident or indicative of a broader trend. Investors will need to stay vigilant and adapt to changing market conditions, understanding that the tech boom may be giving way to a more cautious and discerning investment climate. This evolving scenario underscores the importance of thorough analysis and informed decision-making in navigating the complexities of today's economy. On July 16, 2026, IBM released preliminary earnings data that sent shockwaves throughout the stock market. The report unveiled a staggering revenue and profit shortfall, prompting shares to plummet from approximately 290 to 270. This represents a jaw-dropping 25% decline in one day, marking one of the largest single-day percentage drops for a major Dow component in recent history. The announcement came shortly after the market opened, and by midday, panic selling ensued as investors reacted to the alarming figures. Analysts had predicted far better performance, and the significant miss raised immediate concerns about the company's future prospects. IBM, a stalwart in the tech industry, has long been regarded as a bellwether for technology stocks. Its performance is often viewed as an indicator of broader sector health. The decline not only reflects IBM's struggles, but also raises questions about the resilience of the tech sector as a whole. With earnings season underway, numerous companies are reporting their financial results, and IBM's disappointing figures stand in stark contrast to others that have managed to meet or exceed expectations. This divergence has sparked fears that IBM may be facing deeper operational issues, including challenges in adapting to cloud computing and artificial intelligence trends that are reshaping the industry landscape. The immediate impact of IBM's earnings miss was felt across the stock market, leading to increased volatility and a dip in investor confidence. Other tech stocks saw declines as market participants reevaluated their positions, fearing a contagion effect from IBM's troubles. Analysts are now closely scrutinizing the company's strategic direction and its ability to innovate in a rapidly changing environment. The implications extend beyond IBM, as investor sentiment could shift toward a more cautious approach to tech investments. Looking ahead, IBM faces a critical juncture. The company must not only address its operational shortcomings, but also reassure investors that it can regain its competitive edge. Upcoming earnings reports from other tech giants will be pivotal in shaping market perceptions. If IBM can demonstrate a credible turnaround strategy, it may restore confidence. However, failure to do so could result in prolonged scrutiny and further market volatility. What impact will IBM's performance have on the tech sector's future? Share your thoughts in the comments below, and don't forget to subscribe for more in-depth analyses.